and welcome to this June 25th, 2010 video version of InvestEd Central's Chart of the Day. I'm Tom Boley, InvestEd Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by stochastic.com, simply the web's best financial charts. Today we're featuring Aruba Networks, ticker symbol ARUN. This is about a $1.3 billion technology company. Taking a look at the technicals, you can see that the stock actually had risen back in early April to around the $14 range, did it again at the end of May, and then finally in early June we broke just above $14, got up to about 14.25, fell back one more time to the 20-day and the 50-day moving average, actually printing a doji off of this downtrend. That is a reversing candlestick, and then we came right back up, went through the 14.25 area, and notice the volume very strong, confirming this move to the upside. Now we got a little stretched recently, got up to about $15.70. You can see the MACD had actually reached a pretty high level compared to where it's been over the last 6 months. So that was just showing the stock maybe had gotten a little bit ahead of itself. Also, you can see that the RSI was up near 70. Stochastics were in the mid-90s. So our momentum oscillators were overbought. They needed to see some relief, and that's exactly what we've seen recently on the pullback. Notice on this pullback to the downside, the volume has been much lighter. We did see the volume pick up a little bit on Thursday, but that also coincided with a test of the 20-day moving average. It actually looked like intraday we might move below it, and then we moved back up. Now there's a couple different ways to consider playing the stock. I do like this one on the long side. I'd like to see it continue to hold 14.25, but I think on an intraday basis it wouldn't be a shocker to me if we had one more push down below the 20-day, maybe even put in a low down around 14 and then reverse back up. That would be a better maybe a better spot to enter on that reversal, coming back up over the 20-day moving average, which is sitting right now at 1431. So you've got your 20-day 1431, you've got the price support down around 14.25. That's a key support area. Your resistance sits up at around 1570. So right now we're just trading in this trading range on a closing basis. Notice when we got to the top here, we also had put in a reversing candle at the top. This is a bearish engulfing candle that led to some of this weakness that we've seen. And like I said earlier, stock really needed a little bit of relief because it was overbought. The market's pulled back, and it's actually given traders an opportunity to get into Aruba Networks a little bit cheaper. So the current price down to about 1425 to 1430 looks pretty interesting. If you want to kind of hold out, see if you get one more push to the downside with a reversal back over the 20-day, I wouldn't blame you. But short term, over the next week or two, I would look for a move perhaps back to 1560, 1570. That would be the target. Then we'd need to look to see what the moving average convergence divergence is doing on that move up. If prices move up and the divergence does not, then the 1560, 1570 area is most definitely an area to consider taking profits. If we break down below 14.25, I'd be real careful, especially if the volume picks up, because it would likely lead to a 50-day test, which would be all the way down to 13.25, and a little bit more of a loss than we would be wanting to take. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.